Hey everybody, it's Pete. Good morning. Welcome to Stock Trading Pro. Today's Stock Market Live. We got a big conversation today around earnings. We have the Fed minutes coming out today. There's a lot to discuss today, but more importantly, the volatility has been just absolutely amazing if you are in the right stock. So we're actually going to have a conversation today. If you've ever wondered how to get the better entries in the best stocks, I'm going to walk you through how to do that today. We're going to talk about something a little bit different today, value investing. I'm actually going to suggest a book that I've been reading for a while now. It's actually pretty good. And we're going to do a little bit of a deep dive in a couple of stocks that were going down, have now reversed. And I'm going to show you how you could have spotted that before it happened. But we're actually going to kick things off with NVIDIA earnings today. What's expected on NVIDIA earnings? Are you going to be buying it in front of NVIDIA earnings? We talked about today, buy the dip or sell the chip. It's consolidated now for 2 weeks right in front of a big support level. And it actually has now got more than a 50% haircut, like a lot of stocks have since the pandemic high. If you don't know that language, haircut in trading language means if it went from 100 to 50, that's a 50% haircut. And that generally means you sound like you really know what you're talking about when you're on a trading floor. And it tells you that the stock is pulled back. But like I said, stocks pulling back that far versus stocks being a buyable opportunity are not the same thing. Fed minutes are going to be a big deal today. Everybody knows trading an FOMC announcement can be very, very volatile. And it was. And the market took a hit after that because of how much they're aggressively raising, right? Today, what we find out, and again, it's scheduled for 2 p.m. today. If you happen to be a day trader, it's an absolute must that you need to be aware of this. This will cause just as much volatility as the actual Fed announcement itself, because you're going to have a lot more granular look into what they plan to do for the rest of the year. It's one thing to make the announcement. It's one thing for Powell to make a couple of speeches. But now we're going to find out in a lot more detail what they're going to do. So we have a lot to talk about today. We're going to talk about not only NVIDIA earnings, we're going to talk about two other stocks that had earnings that are up big this morning. And I'm also going to talk about a stock that we brought into our community. There's a big battle going on right now. And I know a lot of traders are frustrated where you have this big move to the downside and you have a lot of these stocks that are rallying to the upside for 2 or 3 days. Should you be buying these rallies after in the middle of the 2 to 3 day rally, or wait for this rally to end and then look to be short selling stock? So there's a lot to cover today, and we're gonna discuss that battle. But here's the big thing, and I did this live yesterday for our community. How do you monitor stocks and be ahead of when they turn? Be ahead of missing that initial push, because let's face it, the better entry you get, the closer you get to the optimal entry, the easier it is to hold on to those trades, because you put the trade on and it kind of wiggles around and sometimes it stops you out and then does exactly what you thought it was going to do. Actually happened to me in Citigroup on a day trade a couple of days ago, but sometimes it's the second entry that matters. So not only are we going to talk about earnings today, we have a lot of trade management type stuff that we're going to discuss today. You know, it'll be kind of fun too. Type in the chat. Let me know what stocks you've actually been trading for the month of May. Which stocks have been the most profitable for you this month? It'd be kind of fun to go back and forth and discuss that. And we're going to talk about this book on value investing that, and also going to post a link to this and the guy's YouTube channel. He's actually pretty interesting. So we got a lot to cover. Stick around. Be back in just 1 second. Okay, so one of the first things I want to discuss today, I just want to remind everybody, our boot camp actually starts every 2 weeks. And with good reason. I see Daryl's in here right now and a few other people, John Oakes. Obviously, thank you for being in the boot camp with us. We get a lot of questions about how are people in your community trading right now with this current craziness that's going on in the market right now with the volatility. I think one of the biggest things right now is understanding trading both sides of the market. We've been talking a lot about two-way trading. So if you could just indulge me for 1 second, I want to brag a little bit about the success of some of our members in the current market condition. This isn't from a year ago. This isn't from when the market was going straight up. This is right now. So I just want to show you these results of people in the community right now. So big thing here with Craig. And again, these are after the close. Best day in a while. Prior to it, I hadn't shorted, but had great success. A couple of longs also worked out. Having a plan to market to go either way. So the first thing I want to talk about here, and it was kind of at the end of that, Doc Craig was talking about, he's making money long and short right now. So the current market conditions are offering opportunities. This is what we teach in the boot camp. But the part that's the most important part that so many people miss is the planning part of it. Being prepared is the hard part of the market. Recognizing the order flow, understanding how to track and piggyback the smart money, understanding how to read the tape. Should I be long? Should I be short? How aggressively should I be long or short? And then you go into the market. It doesn't matter if it's day trade or a swing trade. You know what you're doing prior to the day or prior to the week starting. So that's the first one. I'm kind of like bragging about how people are doing in the community. I'm happy for their success. So again, a couple of longs worked out, shorts worked out, and started planning for the market to go either way. Okay, so obviously super happy there. Now we have Jeremy. Jeremy's been with us for a bit now. Wanted to say thanks, everyone. So this is actually from about a week ago. Closed out an amazing week, up 12%. An incredible time to trade, an incredible place with amazing people. So let me ask you a question right now. Are you talking about the market right now in a way where you're saying that this is an amazing time to trade? Incredible, actually, incredible time to trade. That's what the stock market can be for you when you have structure. The single biggest thing that people get lit up on when they come into our boot camp is the structure. You will know exactly what to do. And that's where confusion comes from for a lot of people. They're trying to find everything as opposed to just following the order flow and then taking that order flow into sector rotation. So I want to finish up with one more here, which is a fact. I'd like to thank you. Surely remember a few months ago, I said I could see everything clearly, entries and exits, but I'm not making money. So he could see everything, but not making money. Okay. Thank you again for now. I've been positive for a few weeks, last month and so far this month as well. Thank you again for a great weekend. Hope for all your support. So again, I'm saying this for two reasons. I want to celebrate their success because it makes me so proud to be able to be a part of that. It's all their success. I'm just pointing them in a direction. But I want to ask you very carefully right now. Are you talking about the stock market right now where you're saying it's an incredible time to trade? Are you seeing results on both buying opportunities and short sale opportunities and having the conviction to expect to make money because you're prepared? And as a factor said here, the biggest thing is, are you aware of everything that's going on in the market, but you can't make money yet? Do you know everything about charts? Do you know everything about technical analysis, but you can't make money yet? That's the power of having structure, order flow, tape reading, optimal entry, and then more importantly, a community of people that you could bounce conversations around. So again, a lot of people are frustrated right now. Our next boot camp starts next Tuesday after Memorial Day, and it's 14 days. It's a very, very small investment for anybody that right now is maybe getting their head beat in. Those are real results from the current market conditions. Look, click the link below the video. Go find out what's in the boot camp. If it's for you, awesome. I'll see you on the other side. If it's not for you, that's okay too. We can communicate here on YouTube and other social media. All right. So I want to get now into Nvidia. Obviously, we talked about some of the ideas and heading into earnings. Q1 preview, gaming data center business poised for a strong quarter. So here's the big thing. If you're a regular viewer of the channel, you know that what we spend all of our time talking about is guidance. Guidance is the big thing. And if you are not familiar with the way earnings, at least the way we look at earnings come out, there is the actual numbers, the growth numbers for the last quarter. Now, here's a big thing that a lot of people are a little fuzzy on, quite honestly. All companies don't have the same expectation, and that's a big thing. Is it a growth stock or is it kind of a more mature stock? So let's say, for example, Microsoft is a very mature stock, or is it a company that's a recent company that's kind of like a high flyer, which let's say PLTR was until it started hitting the toilet? Each of those types of companies are going to have different types of expectations. So the expectations for growth and then the expectations for the guidance. So we're reporting on the numbers of what happened. So that's going to be the first thing to pay attention to when NVIDIA, who's scheduled to report after the close today. And then the second part is the guidance. So let's take Walmart as an example. And this is just to be totally transparent. I bought 1/3 position on Walmart prior to earnings because I was expecting guidance to be good for the year. Even if earnings came in okay, I was looking for guidance to be good because of inflation and all those kind of things. I expected it to hold the bid, and then I was looking to build a position. Guidance did not come through, so I actually took an overnight loss on that, got out of it, and made it back over the next couple of days on the short side. But this is the big thing. when you're looking at earnings, it's both of those things, but it's not the raw number. It's the number that's reported, and then it is the guidance and the growth numbers around those two. So I'm just going to point out what's expected here in NVIDIA. Let me just make this a little bit bigger for you. Issued a guide, okay, posted Q4 earnings and gave guidance that handily, see, this is the big thing here, handily beat expectations. So now the consensus estimate is $1.29, so it's talking about year over year, and the revenue estimate is expected to be 43, okay? They're expecting good results. Now, IBM also had good results on their cloud business. So you got Bank of America, Morgan Stanley, all of them looking for good numbers coming out of this. So here's what I want to point out as well. We're going to go over to the chart. We're going to take a look at the Walmart trade that did not hold the bid, how we made it back after that, and then we're going to tie that back to a big level that NVIDIA is approaching right now. But after it's actually taking more than a 50% haircut. So it's got about $20 to go until the big support level. So let's actually take a look at both of those charts first. Futures are actually down this morning after we rallied yesterday. So if we go over to Walmart and we go over to the daily chart, this is actually the level that I was expecting it to hold. Actually, no, I'm sorry. This was the level. So we pulled back into earnings, and earnings came out. I was looking for this 147 level to actually hold. I was looking for this pullback to hold, have good numbers come out, guidance be good, and rally. It didn't. Now, this is the big thing. I'm being transparent with you. I lost money on the overnight, but I was very clear. It was 1/3 of my position because of the unexpected nature of earnings. So I was looking to start a position. If it didn't hold, it went against me. Okay, stinks, but I took a loss. But here's the difference between a trader who's in charge, somebody who considers themselves a speculator and in charge of the outcome, versus somebody who says trading doesn't work, and then you go to work the next day and you're complaining the stock market stinks. The next day in Walmart, which we're going to tie back to Zoom earnings from yesterday, and we're going to then look at a couple of other ones, specifically Nordstrom and Toll Brothers. And then we're going to take a look at another stock that has accumulation in a way that is so obvious, I can't wait to teach it to you, okay? So anyway, Walmart actually ended up getting clobbered, but then the next couple of days, you can see that it was below the opening price for this entire day, and then below the opening price for this entire day. And now it's actually setting up as a bear flag. So the thing that I want to get across to you, especially if you're finding this market a little bit more challenging right now, when you exit a losing trade, the first thing you need to do is assess whether or not it was a good idea. Now, remember what I just said. I didn't say whether or not it made money. Was it a good idea? Would you take that trade again 10 times out of 10 times? The outcome after we put the trade on is up to the market. Our job is what happens before the market and setting up and stacking the order flow, stacking the probabilities. If you exit a trade and it does not make money, but you still firmly believe it was a great idea, you just pay the expenses on that loss. But the very first thing that should be going into your mind is, how do I make that money back? Now, I'm not saying to revenge trade, which is a very common phrase in trading, where you're angry at that stock. You're like, Walmart owes me money, and I'm going to go make money in that stock. That's not what I'm talking about, although Walmart did offer some opportunity. Revenge trading would be, I'm going back to that stock and I continue to try and buy it, trying to prove myself right. Smart trading is, okay, the bearish order flow is there and it's continuing to pressure that stock down, which means that then we had short sale opportunities for 2 days in the stock. So shorting it on the way down, as we talked about in some of these quotes here, talking about trading stocks on both sides of the market, that is what a good trader does, which that means now we're going to tie that back into Zoom from yesterday. Now, we had a lot of selling pressure on the market heading into yesterday. Obviously, the lawsuit with Facebook, Meta Platforms, and we also had Snap yesterday down 30%. So the market got absolutely smacked. So what you need, pre-market, that's the big thing, pre-market. We get so many questions about what's going on pre-market. I want to get out of my swing trades pre-market. The regular trading hours are where we're trading, okay? Yes, mark off your highs and lows pre-market. Definitely know those levels, especially if it's got significant volume. But we told the entire community yesterday, like I'm telling you right now, in both JWN as well as Toll Brothers, there's pre-market activity, good earnings numbers, good guidance. At the very least, have it in your list so that if the market bottoms out from the pre-market selling pressure and opens up into the market, which the market did yesterday, there's going to be opportunity. So remember what I said before. I'm just going to pull up Doc Craig again because he mentioned something very important. which is being prepared, starting planning for the market to go either way. So if we go into Zoom yesterday and we take a look at let's take a look at the market. Okay, so if we take a look at the market yesterday and we go into the 5-minute chart, you can see that the market bottomed out here right around 11 o'clock. Okay, we also happen to be watching the VIX readings, and when the VIX tops out over here, when the VIX topped out, you can see right around 11 o'clock and started pushing down. That was an opportunity to get involved. So I'm telling you, prior to the trade, the same way I'm telling you right now, 2.5 hours or 90 minutes before the market opens, you need to be building. If this happens, then I plan to do this. If this happens, if this stock with good earnings goes down with the market in the morning and then the market finds support, this is going to be the first stock that I look at because of this positive earnings catalyst. So I'm going to walk you through this from yesterday because again, if you take nothing away from this, okay, I am so big on don't worry about win-loss percentage. It's about, do you make enough on your winning trades? That is what will separate you from somebody who says, I had a 90% win-loss percentage. Great, but my account only went up 2% this month. Versus somebody who says, okay, I only had 40% win-loss percentage this month, but my account went up 10% this month because I had 2 really good trades and I held them. So again, this is, if this happens, then I plan to do this. I'm walking you through real time what we're supposed to be thinking about. And it doesn't matter if it's a day trade or a swing trade. The day trades are easier to explain because you get a lot more examples. So we watched the market. The VIX was rallying hard out of the gate. That's bearish. We drew this box and we said, if this starts to go down and if the market catches a bid, which it did right around the same time, we already knew that Zoom was going to be the stock that we were going to watch. That's real trading, okay? I can't express this strongly enough. If you are making your trading more complicated than if this happens, then I plan to do this, you're making it too hard. That's why I could show you those testimonials and success stories in the current market, because we spend most of our time talking about being prepared so that when the market opens, it's easy to know what you plan to do because it doesn't matter what happens next. You're literally saying, if this happens, then I plan to do this. If this happens, I plan to do this. If what I'm looking for does not happen, then I don't do anything. It's that last part where most people mess up, where they say, I want to see this, they don't see this, and they trade anyway. Those are the trades that are stopping you from being profitable. So let's take that conversation over into a couple of other ideas that actually have earnings. So obviously we talked about the Fed announcement today, the Fed minutes coming out scheduled for 2 o'clock today. So we're going to work our way over now to Nordstrom. Nordstrom actually had some good numbers this morning. And again, first year outlook. First quarter is the prior quarter. Expectations were topped, and now they raised the outlook. So the outlook is the guidance. So taking a look at JWN and getting an idea where it is on the big picture as well as here. So it's up 2.5% right now. So now, yesterday is what we call a bullish reversal. So it actually traded down, came back, closed above the open, right? So how do you trade Nordstrom? Well, with the same exact game plan that we just talked about with Zoom. It's a 1-day, maybe 2-day trade if you get follow through, but certainly on the short-term picture. If, again, giving you the outline, if the positive earnings guidance in Nordstrom, the symbol is JWN, shows order flow after today's market opens, I will be looking to buy the stock because that means today's order flow is validating the earnings catalyst. If today's order flow shows selling where it doesn't matter and the big picture is still going down, I will leave it alone. If the current market conditions, which are opening lower after the market open, find buyers and the market internal firms up and sector rotation firms up, so I start to see different sectors showing green after the market opens, and specifically, obviously, JWN in a particular sector and group. If that sector starts to show buying, then I will look for an entry in Nordstrom as either a day trade or if I like the swing trade, which the swing trade is really not a perfect idea right now, probably a better day trade, then I will take action. So think about what we're talking about. There's maybe 3 bullet points there. If the stock opens strong and stays above a certain price, then I'm going to look for buying opportunities. If the stock opens strong, stays over a certain price, and the market show strength after the market opens, maybe I'll hold that trade a little bit longer as a day trade. That's it. If the selling pressure in the market stays weak, even though the stock had good guidance, if the selling pressure stays weak and the stock stays below today's opening price, and even worse, if it's below volume weighted average price, which is one of the big indicators that we use, matter of fact, it's the only indicator we use. If that happens, then I will do nothing. Then I'm going to go over to the other idea that I'm looking at today, which is Toll Brothers. Toll Brothers Q2 earnings breezed past Wall Street estimates. Now, what's a big thing about Toll Brothers here, which I think is super interesting, is how many people right now are reading about how bad the housing market is, right? Bad, bad, bad. Inventories, everything crappy, right? So what should be happening, and we actually just had numbers come out yesterday about same thing. What should be happening in this group of stocks right now? You would think that they'd be getting pummeled, right? Bad, everything's bad in the housing market. Well, they haven't been. So these are the things you have to start to pay attention to. During this time where the market's getting absolutely crushed, it's showing, again, less selling pressure. So we need to dive in here, and now we take a look and see, is there any heavier volume coming in here during this? And there is. We're pushing down, and volume has actually been pretty significant. So big volume yesterday into earnings, and now we're actually trading higher. So does that mean that now let's get in there and start buying Lennar, Toll Brothers? Maybe as a day trade today, if we use the same criteria that we just talked about before. But a lot of people on the call right now. Hey, Mark, how's it going? Just want to make sure I say hello. Good morning, Mark. So how many people right now are full-time job and you're swing trading, right? You want to have stock market be a side gig. So that means that you're not looking at the day trading side of the equation like I just outlined. Then we need to create a different outline, a different game plan template for how we might want to consider Toll Brothers as a potential swing trade after earnings, after this longer term consolidation pattern, which you can see here. How do we game plan for that? Well, one day of buying is not enough. Not for me right now after this big move to the downside and sideways. Now, it's impressive that it's holding the bid and going sideways instead of going down with the rest of the market. So it's showing a little bit of relative strength. But the same way that we just outlined day trade scenarios coming off of that earnings, now we're going to do the same thing with swing trade, but we're going to go out a little bit further. We actually had somebody yesterday email our customer support, somebody who's just joined the boot camp, saying, what time frames do you watch? The time frames you watch are relevant to your trade objective. So is it a day trade, a swing trade, a position trade, or an investment? The longer time that you plan on holding the trade, that's going to dictate which order flow you try and track, piggyback, and enter. So in this case here, because Toll Brothers were looking at a little bit longer trade, which in this case would be a swing trade off of the positive earnings guidance, I'm looking then at the weekly chart instead of the daily chart. So if we zoom on over to that and we start here, this is what we need to see. We need to see something like this first. I want to see at least 10 days worth of price action following up on the earnings. Oh, let me pull it over. Following up on the earnings. So what I'm looking for is I'm looking for well bid on the weekly chart. So I need for this week to finish. Then I need next week's price action to trade with higher highs, higher lows, and close near the high. Why? Why do stocks go up and down? Because somebody with deep pockets, a big research team, believes that the current cash flow in Toll Brothers is a value compared to what they think it's going to be at some point in the future. So they start to hold the bid, pay higher prices because they believe down the road it's going to be worth more. So I need to see well bid weekly candlesticks this week and next week. So this week finish. Next week, I want to see that smart money come back in after earnings, digest all that news, and start buying next week. So next week, I want to see higher lows, higher highs on the weekly chart, and close near the highs. That will tell me that deep pocket smart money are now sticking around after earnings, and they like the value, which actually is going to bring me to this book. I just started reading this book not that long ago, Modern Value Investing. You can see the guy's name up over here. Sven Carlson. He's actually got a YouTube channel as well. I highly recommend get over there and take a look at it. The point that I want to bring out about this, so whether it's this example that we just talked about in Toll Brothers or whether it's any of the ideas that we have right now. We could rattle off a lot of stocks right now. If we even take a look at, let's say, this stock AFRM right now, this is one that's a very popular stock in our community to be actively trading, and maybe we could even use coin or some of those stocks. Look, 170 down to 20 and change. Could even use coin as an example. 380 down to 60. Look, I'm telling you, nobody's going to predict when, but I'm telling you that there are going to be some really good long-term opportunities sometime in 2022. Now is when we need to start being prepared for it, not after the fact. So now we got to start diving into some of these companies and doing a little bit of a different research. But this is where it gets fun. So you're like, I don't want numbers. I'm not a math person. I'm not going to read the Wall Street Journal every day. I can't do that. I was never good at math in school. Okay, that's fine. So what I'm going to show you right now, if you know one of the most popular PDF downloads that we have, which is Smart Money Footprints. When you download that PDF, it walks you through the 4 different phases of price action. Now, what I'm about to show you is pretty cool because this is a stock that we pointed out to you about 2 weeks ago. So I want to be clear about this because there's moves to the downside. Best case scenario, it ends on heavy volume and then goes sideways on heavy volume. That move to the downside ending on heavy volume, you usually see big red candlesticks, big volume spikes. That's the end of the selling. Then you start to see churning, sideways type price action, and the volume stays heavy. That's what investors know as accumulation. When you start to see those kinds of price action, and it happens on 5-minute charts as well as on daily charts for longer term swing trades. When you start to see that kind of price action, again, it's both of those pieces. Big move to the downside, ending on heavy volume, going sideways on heavy volume. That means that somebody with big money, the smart money, is now stepping in and saying, okay, this thing is going down, but we like it at this price. We like the cash flow. So I'm going to show you a chart right now, and you want to screenshot this because it's pretty darn cool. All right. All right. So we'll go over here, and we're going to take a look at this one. Okay. We talked about this one about a week and a half ago. Now, if we just look at the chart, you'd be like, okay, that's pretty darn cool. Big selling. All right. Nothing to do yet. Nothing going on. This is what I want you to focus on after this big selling here. Bearish gap, big red, and right here. That's what I want you to focus on. Right there. Look at how heavy the volume got here and what the stock has done after the fact. So now the market's going down. Now, what's this stock doing compared to the market? This stock is rallying on heavy volume while the market is still going down. So this stock is showing relative strength after we saw capitulation, which we call exhaustion to the downside, accumulation. Buyers now had to step up. Why would buyers need to start paying higher prices? Because the short sellers see that it's not going down anymore. So now that the selling has dried up, it starts to go sideways. When the selling stops or dries up enough where they need to get more shares, that's when they have to start paying higher prices. So whether we're talking about accumulation, and I'm going to put that chart up on the screen again here, CMCSA, whether we're talking about obvious accumulation like we see here, look at the increase, or something like Toll Brothers, which we just talked about here, we're not seeing it yet. We want to see now weekly charts, heavier volume, and start to see well bid. This is where I start to get loud about trading because I get so excited when we can really whittle down the complicated parts of trading and just say, no, just look for this. Forget everything else. Just look for this. Just ask yourself, why do stocks go up or down? It's because somebody believes today's price is valuable compared to where it's going to be at some point in the future. It's the only reason stocks go up, because somebody with deep pockets is paying for them. They're paying higher prices. So we just talked about Nvidia. Do we get smart money coming back in after the market opened? We talked about Zoom. After the market opened and the market bottomed, buyers step back up. And let's look at that Zoom chart again. If you don't believe that it only takes one trade to make your entire week, you need to level up your thinking, because this trade in Zoom yesterday and the day trading side of things, okay, one trade that we were prepared for, 88 to 97. That's a $9 move intraday. That's day trading criteria. We just built it out. If the market does this, I plan to do this. Keep it as simple as that. The problem for most traders, maybe you, I don't know, maybe you're just not doing the planning. Maybe you know everything, but you're not doing the planning. And then the next step after that is learning about optimal entry and how to hold your trades longer. So we talked about Zoom as day trades. We talked about the market reversing potentially in Toll Brothers. We talked about the market already reversing based on accumulation. That's very easy to explain. Smart money stopped it from going down, volume increased, and then the selling dried up and they had to start paying higher prices. That's all trading is about. But having the plan and following it's not the same thing, which is where I come in. I will make sure, and there's a lot of people on the coaching call, on this call right now, I will make sure that you participate. It's my number one request. I will go at you. Again, I know there's a couple of people in here that are on it right now, like Lewis. I will go at you and I'll say, Lewis, you haven't asked questions. I want to help you. That last part of understanding how to apply what you know, you're so close to being where you want to be, but you just need that one little different perspective. I hope that today I at least gave you some ideas that trading does not have to be that complicated, but it needs to be structured. You need to have the same plan of if this happens, then I plan to do this. If what I'm looking for does not happen, then I plan to do nothing. That's what will separate you from these same people. Again, I want to show you these again because I'm pretty proud of them. I'm celebrating their success. It's not about me. You start to see these kind of rewards where people are saying positive, seeing everything clearly, positive for a few weeks, positive for the last month and this month as well. Okay. An incredible time to trade. I can't express. Are you saying right now this is an incredible time to trade? People in our community are. Not because we're predicting anything, but because what you're seeing from me right now on this video is what we do all day, every day. It's not about super active trading. It's about talking through each other. Now is an opportunity. Let's take advantage of it. Or we're not doing anything. We're saving our cash. We call it PPC, preserving precious capital, when the edge is super low and there's nothing to do. Then the only thing to learn after that is making sure that you earn enough on your good trades to pay for all those pesky small losses. Look, I would love to see you in the boot camp. I really would. It starts next Tuesday. If you decide not to, it's only $195. Most people risk that on lunch. It's 14 days for $195. If you decide to not sign up, which again, I hope you do, you get this from me the whole time we're together. At the very least, I hope I'm inspiring you to understand that stock trading can be much simpler to execute when you have a definite structure for what you're looking at. So I just want to say this very clearly. When you know what you're looking at, you're not lost anymore. If you're lost right now, that means that there's a gap between what you want to accomplish and what you need to look at. I hope you sign up. I hope that you become one of our alumni because I take it very personal. Our coaching calls, sometimes they're 2.5 hours. If you sign up, fantastic. If you have any questions about the bootcamp, post them below or reach out to our support team. I'd love to see you in there. And we actually get a question about why are you talking about this on the live stream? And there's a very good reason. I know I can help people because I have a track record of helping people. I think what we do is absolutely amazing. And I feel like I have a responsibility to at least let you know about it. And then you could make an informed decision if you want to become a part of our community. So that's what I have for you today. Read what we talked about. Watch what we talked about one more time because we gave a lot of lessons today. And I think that lesson in Zoom yesterday where I said, if then, this, that, that's going to be one that you're going to watch more than once. All right. Have an awesome day, everybody. I will speak to you soon. Go have a profitable day. If you have any questions, definitely leave a comment below the video. If you want to learn about the bootcamp or sign up, click the link below as well. I hope to see you there next week. Have an awesome day, everybody.